Greetings, everyone. This is Richard Crevo, and I want to welcome you to today's session on trading triangle patterns. And just a bit on our usual risk disclaimer here. Trading foreign exchange involves significant levels of risk, may not be suitable for all investors. We should only be trading with risk capital. Do not invest money that you are not in a position to lose. The high degree of leverage can work against you as well as for you, and the content provided is for informational and educational purposes only, is not intended as specific trading recommendations. And just as a side note on triangle patterns, they're not always available to trade. Generally, what I'll do is I'll go through the charts, scrolling through them, drilling down the charts as I usually do, and after a while, you get used to seeing the different pattern formations. And when I do see a triangle, I generally will become very interested in it, especially if it's a nice tightly configured triangle pattern, not a loosely configured one. So if a triangle pattern presents itself to you as you're scrolling through the charts, in my opinion, it's worth going through the process of checking it out. And personally, I'll trade a triangle pattern on a chart of 1 hour or above. Generally, I don't get into triangle patterns that are on 15-minute time frames, 30-minute time frames. Below that, below 1 hour, chances are the pip potential is somewhat diminished. Okay, this is the chart that we're going to be using for today. And triangle patterns form when price action oscillates between support and resistance levels and consolidates in the process. So here I've drawn the lines, the resistance line and the support line, and we can see how price action is consolidating and compressing in the process on this historical 4-hour chart, and this happens to be the pound yen. And you can see how the price begins to consolidate and coil up between support, that lower black line, and resistance, the upper black line. Think of price action where it's compressed like that as kind of a spring being compressed. And just like with a spring, eventually at some point, that spring, which in this case is price action, is going to be released and a breakout is going to take place. Now, our entry signal is right here where it says entry candle. We see we've got our resistance line, we've got our support line, we've got 2 tests of our support line, and we've got 1, 2, 3 tests of our resistance line. Now, our entry candle here, you can't see it, it's a little bit fuzzy on the chart, but it's just above that resistance line. It's currently above that in our pattern. Now, if this candle closes above that resistance line, that's going to be our entry signal. If it does not, we'll continue to bide our time for either a bullish breakout, one to the upside, or a bearish breakout from the pattern. Now, just as a sidebar on this, this slide came from MarketScope charts, which I use quite a bit. And you want to know sometimes how long before a candle is going to close. This is a 4-hour chart. Well, when is the 4 hours up and when is this candle going to close? And a handy little tool that they have on there, it's called the show time to end. In other words, show time to the end of the current open candle. And we can see when we put this on our chart, this particular candle is going to close in 3 hours, 9 minutes, and 29 seconds. Pretty precise. So it's kind of helpful because you don't have to, well, when did the candle open, and then look at your watch or whatever. I find it a lot easier. So you can add this particular tool to any MarketScope chart by just clicking on the chart itself and select Add Indicator. Scroll down, I believe it's under Other, and then select Show Time to End, click OK, and you'll be able to put that on your charts. Now, as far as stop placement goes, let's say this candle, this entry candle right here, in fact, does close above our resistance line. We would enter the trade long at that point, and the stop would be just below the support line right there, labeled in red. Now, in the case of a downside breakout, the stop would be placed above the resistance line. It's possible price action can come back inside the triangle. That can happen a lot. Ideally, we don't have to close back inside the triangle, but price action can move back down, testing as it breaks out from old resistance becomes new support, and sometimes that is going to be tested. Now, when do you take profit in a situation like this? When you look at the far left side of this triangle, you see these 2 green arrows, or one green line with an arrowhead on either end that I've put in there. And in the case of any triangle pattern, that distance right there at the beginning of the triangle, where the triangle first starts to form, that distance can be used to roughly approximate the distance that price will travel after the breakout occurs. So the line right here, the green line right here, is roughly equal to this line that we have right here. So we could measure this line, see how many pips that is, and then go and place our limit at that level above or below, whichever way it goes. So in the case of the bullish breakout, we'd place that line or simply determine, number of pips, like I said, or, that it encompasses. And then as we'd see it on our chart, we'd set our limit around the top of that line. Now, a more conservative trader, if this is exactly where the limit would be, a more conservative trader might shave off 10, 15, 20 pips just to make more certain that that limit is triggered when it gets up there. Because I don't know if you've ever been in a situation, I know I have, where I've got my limit set and price goes up and it gets within 5 pips of the limit. I'm not in front of the computer, and then it tails off back in the other direction. And I come back later and I look and I go, oh man, rats. If it had only gone 5 more pips, I would have hit my limit, or if I would have brought my limit a little bit closer. So a lot of times I don't shoot for that perfect. Like if it's, let's say if this is 100 pips, right in here, rather than setting the limit 100 pips above my entry, what I might do is set my limit 80 pips above my entry, or 85 or 75 or something along that line. So I get a good healthy piece of the move, but it doesn't have to be precisely to the top to get it. And that way you're kind of not guaranteeing, but you're assuring a greater likelihood of getting your limit hit. And in the case of a bearish breakout, like I mentioned before, if we get the breakout, let's say it doesn't occur here, and price trails down to the downside and breaks out to the downside, a bearish breakout, we would just reverse this. The stop would go here and our limit would go down below. So I hope that answers questions on basic triangle trading. If you have any questions that you would definitely like to send along to me, please feel free. rcrivofx@gmail.com. And always keep in mind, if you like what you're seeing here and everything like that, that I do offer one-on-one mentoring. And you can, again, contact me at rcrivofx@gmail.com and just put mentoring in the subject line, and I'll be sure to get back to you in either way. So thanks again for being a part of this, and I look forward to having another posting for you in pretty short order. Bye now.